Welcome to the Freight Project podcast, brought to you by Ceresys, a North American third-party logistics company providing shippers transportation management, technology, and solutions.
On today's The Freight Project podcast, I welcome payments expert and entrepreneur Robin Gregg. Robin is also the CEO of RoadSync, who is looking to streamline B2B payments across the entire logistics industry. On the episode, Robin will talk to the current state of payments and logistics and how there is a great opportunity to improve the processes around payments from trucking and to other key critical logistics areas. I hope you enjoy this episode of the Freight Project Podcast. Well, hello, Robin. Welcome to the Freight Project Podcast. As with any first-time guest, we want to make sure our listeners know who you are, what you're doing now, and a little bit about your background. So, Robin, please let us know all that information so we can get ready for today's episode.
Yeah, so I started my career in payments. So I've spent over 15 years at payments. I actually started at Capital One, running a medical lending product for them for many years, and worked at an alternative payments platform out of Tampa Bay that we sold to Amex in 2010. But then I joined the world of commercial payments, which was really interesting after being in consumer payments for so long. And I learned a lot about how underserved some of these commercial segments are in terms of their payments. It's really more like the Wild West when you look at B2B payments versus B2C. And one of the industries I specifically got interested in was how businesses paid for routine expenses like fuel. The company I went to in 2010 was called FleetCor. It was at the time a private equity-backed company. And I learned just a ton about this enormous world of business-related expenses and how businesses were getting paid in sort of unexpected ways. It ended up being a really interesting experience. I actually worked with another Capital One alum. We grew rapidly over the time I was there. The company IPO'd. And now it's the world's largest provider of fuel card and commercial payments, and is a really interesting company. And I spent 7 years there. I ran the direct fuel card business for a little while and helped customers everything from sort of two-vehicle landscaping companies who needed to let their employees purchase fuel all the way up to major enterprises who might have enormous commercial fleets. So I really enjoyed it, but I wanted to do something entrepreneurial again, like what I did before my time at FleetCor. And so I ended up running across this company that had a really interesting payment platform that was helping warehouses accept payments from truck drivers, also known as lumping fees. And those were routinely being made in paper. And what this group had done is figure out a way to digitize those invoices and the paper transactions themselves, making it more efficient, less fraud prone, less error prone, and just a better experience for both the payer and the facility. And what I was struck by was there was really no reason why it should be harder for trucking companies and their drivers to pay for things than it is for us as consumers to make payments for things like, buying a cup of coffee or paying a doctor's bill. But today, the world's really different. B2B payments are more likely to be paper-based and are a lot less efficient. So, I was very excited about starting to innovate on that and really bringing this experience to a whole new market segment. And I think there's a vast opportunity.
Yeah, I agree with you. And it was really interesting for me when you look at the trucking industry. I didn't come from it per se, but I did a discipline that a lot of trucking and logistics companies need, and all businesses need: marketing. And, I'd already gone through sort of a disruption of the marketing industry back in 2010 when social media started coming online. SEO was a big part of, getting noticed online and generating awareness, and then came in content marketing and then demand awareness. And now we have things like marketing automation. And, we take technology, I think, at least in marketing, for granted. And I fully expected when I came into this, maybe you did too, that the trucking world would probably be the same. I mean, that's a lot of volume of money. We're talking about an almost $1 trillion US market in over-the-road shipping modes, and things like the TMS had come into play, like what Ceresys has done with our customers, giving, shippers a web-based platform instead of a paper bill of lading so they could gain some efficiency. And that's not any perhaps different than what you're describing with payments. But one, why do you think it took so long for this to kind of come to the forefront, and why what were the problems, being caused for logistics companies that were still relying on paper payments? What are the impacts that paper payments can have on the supply chain at large that you are trying to solve there at RoadSync?
Yeah, I guess to your first question, which is why has this persisted? Because obviously so much in our personal lives as consumers, and then you also indicated in sort of marketing technology, so much of it has been automated or, made more streamlined and digital. For the trucking industry, I think the reason it's been harder for them is because there's so much fragmentation and so many different players that are involved. There are just hundreds of thousands of trucking companies that serve this market. There's a heavy use of owner-operators, and the business relationships are not stable, right? You might end up, a lot of times brokers don't use the same truck drivers for the same routes or the same loads. They may not even have the same loads themselves. And, because the relationships change so much, having sort of established ways to set up in payment can not exist. It makes it harder to do. And so I think because paper always works, and paper, especially for some of these real-time transactions, is in some ways guaranteed. If you have $100 bill that's being given to you, that payment can be put into the bank versus waiting to bill for something and expect to be paid for that later. Because there's some reliability and just a desire to collect that payment right away. I think these things have just persisted for much, much longer than they might with an industry that might have a little bit more consolidation. And that's just my hypothesis. I don't really know. But, it is definitely still pervasive. Paper is being used all sorts of places in both invoicing and payments themselves. Not just for these real-time payments that we're serving today, but also for things upstream. And, it's a problem. Paper is a lousy way to conduct business. It's more difficult to trace. It can be lost. It's slower. You just may not have your invoicing and payments completely integrated into your other business systems. And so we find that our businesses that we're helping who are very paper-based really have a harder time running their back office, managing their cash flow, and just conducting business on top of having the actual overhead of conducting business with paper, of having to take payments to the bank, of having to reconcile these payments. So it's not a great way to run your business, and it's harder to have access to sort of best-in-class financial products. It's harder to manage your business and your cash flow. And, it's just better if you can digitize that. And so it's a great opportunity for these businesses.
Yeah, I guess I could equate it to some of this interesting industries that have come up to deal with college debt. I think about the company SoFi as an example, and I've looked into them and had friends who've used that to help with some of their debt consolidation or something like that. And the ease at which it connects to so many banks, it's able to capture your W-2, especially if your employer does it through like a system like Intuit or something like that. And everything's integrated, right? You talk about just, again, almost $1 trillion in freight, and it's harder to maybe see your total financial view because it's paper-based primarily than it is for the average 27-year-old to connect their financial life to a loan provider. And that's just one example, as you said, being able to maybe get a short-term loan to help, infuse some cash into your business. Imagine if you had to, say, hey, employees, where's all of our stuff? And they go, well, I don't know. Well, we can't get a loan and to help the business because we don't have these digital payments. So that's an interesting thing to highlight that I don't think many people really appreciate, that money is what trade is what really is the backbone of the logistics and freight industry. And the harder it is to access and to get paid and access those documents, the harder it is to maybe do future things. Or heck, what if you're ultra successful and you bring a lot of business on? That's a hindrance to your own growth. And we all want to get to that profitability. So that's the name of the game. So in your experience, you've been able to really identify some of these challenges. And I'm sure some of the people listening to this go, yeah, I mean, this is hard, but how do I, go from that transitioning period of I'm a paper-based payment environment, but I want to go to digital? How do you cross that chasm? And then when you've decided to do that, what could it mean for your business in the short term?
Yeah. So for our customers, the thing that's most compelling to them is, is sort of revenue capture. The typical customers that we're serving, they know they are not consistently billing for everything they should be. They know that they're not able to consistently collect payment on each and every invoice in the time that they should, or even on the transaction level as they should. And part of it's because they actually have employees, their own employees, who are managing this for them, and their own employee base could be rather transitional as well. I mean, there's a fair amount of turnover in some of these markets. And, it's hard to make sure that each and every employee is doing things and conducting business in the exact same way and reliably collecting all your payments just like they should be, or invoicing the right amount, and taking everything to the bank. And so that they know that that's a problem. And so we basically pitch to them, we are certain you're leaking revenue. We're certain that you have disputed transactions, and we can help you manage all that because you're going to have visibility on each and every invoice and each and every transaction. And that's really compelling. That's compelling to them to have that kind of control, that kind of visibility. And it doesn't take a lot to know that's probably true, that they are leaking revenue. And so what we have found has been effective is to show them the product. Because the big concern, the barrier is this is going to be hard. This is going to be complicated. I'm going to have to install something. I'm going to have to buy hardware. And none of those things are true. This is a cloud-based product. They can access it from any mobile device. It's super easy to use. And so what we found works for this market segment is to demo the product. When we demo the product, almost half the time people say yes to us and move forward with using the platform. And so we think our name of the game is just to show it to people and show them how easy it is to use, get in front of the market and kind of show them what the payment experience can be. And it's not a daunting thing. It's not a hard thing to implement. And I think that's the way to kind of get these sort of new technologies adopted. It has to be super user friendly. It has to be straightforward. And they have to see it. This is a group of customers I think really need to see things to believe it.
Yeah, I think you're right. In an industry that's primarily, the growth of it, at least over the last 15 years, has been thanks to the freight forwarder and the freight broker, or some sort of 3PL who's helping out with that warehousing function, or even some of these other software providers that aren't really necessarily focused on digital payments, but it might be an aspect of the larger value that platform, like a warehouse management system, could bring. And, I think that as more technology gets in place, where even TMS have been around for 20 years, adoption rates are still below 50%. But I think that's starting to rapidly increase. There's a lot of VC money coming into the logistics technology space. Things like blockchain and artificial intelligence are being looked at with a lot of hype. But I think there are some real, applications that exist today, and all of that technology that's going to be infused will help increase the adoption of this. But regardless of the ease of use, and we have this same issue where we are here when we're selling to shippers with our transportation management system at Ceresys, where folks really are married to the way they've always done things, right? We've always done it that way. If it ain't broke, let's not fix it. And I think maybe there are people who might resist change for one other reason or another. Maybe it's they think, all my stuff's going to get hacked, or I've always done it this way and it's never failed me. Why would I invest in that kind of program? So how do you convince these diehards out there who say, look, I'm sure that would give us some efficiency, but I just think we don't have a broken problem right now. What would you do to overcome that objection?
Yeah, I mean, we approach that in one of two ways. One way is to kind of go through some of the value props that we have for the customers. So specifically around, have you had a disputed transaction? How often? Have you ever had your employees steal from you? And if any of those things have ever happened, then the ROI of the product is clear, and it's also no longer a true statement that, there's nothing wrong with my existing process. There's something is wrong with your existing process if you know that, you weren't able to collect revenue when you should have because your employee rung up the wrong amount or failed to collect something or took a whole day proceeds home with them. And that's happened. And a good percentage of our clients have had experiences like that you can kind of tap into and be like, you know what, it is broken. And so this is what happens. I think the other thing that's worked for us is to compare it to their own personal experiences. And this doesn't always work, but a lot of them, are using, digital processes for their own personal transactions. They use online banking, and just the rationale of like, why are the restaurants you're going to doing things in a more professionalized way than you are? I mean, that this is the way things are headed. And they believe that. They see it in their own personal interactions in and out in the world. And I think that they do start to realize that to be competitive, to be more efficient, to squeeze out just a little bit more efficiency in their business, this is a really easy way to do it. And those can be compelling. I think those are people for the most part do know that this is the way it's headed. The other thing that we do that makes things more accessible is that, we've been thoughtful about how we price our product and really price it where people are paying for it on usage. We are not charging big upfront implementation fees. We don't rope them into high monthly fees. We really stand behind our product and are willing to let people try it and pay for it as they try it. And that really helps too, because it's not, we want them to commit to really trying it and being sincerely trying what it's like and how it changes their business. But it also feels less daunting to them. These are not cash-rich businesses. And so making sure something works for them before they commit to it is super important.
Yeah. And you're right. There's so many different players in this industry, hundreds of thousands, if not more. And they make up all kinds of sizes of companies from, massive retailers with multiple distribution centers and warehouses to 3PLs who maybe just focus on warehousing to your owner operator, right? Your driver, owner operator who's got maybe one truck or a couple of trucks and they still have to get paid too. Literally, this industry doesn't work without the movement of finances and payment. It moves just as fast and is as vital as the precious cargo being delivered by those truckers into those warehouses. But let's get an understanding, Robin, of who uses RoadSync. What is this payments platform? Who's it for? And what can each constituent that uses it get out of it?
Yeah, I mean, it's really for businesses that are invoicing and collecting payment. Usually in a mobile environment. So we started by serving warehouses and freight handlers, usually for invoicing things like late fees or unloading fees, also known as lumping fees. And why they needed something was that they needed something that could accept a variety of different payment types. They needed something that could invoice in real time and could reliably and quickly accept payments from truck drivers or their carriers and brokers almost instantaneously so that they can actually collect payment, collect all the documentation, and get these truck drivers back on the road. No one wants to be a warehouse that's known for holding up drivers and kind of having a congested facility. And so that was the initial market that we started by serving. We also serve other people who accept payments from truck drivers and carriers, like heavy truck repair and tow merchants. They also real-time invoice and accept payments for things like their repairs, towing. And we're even starting to explore serving some of the smaller carriers themselves, usually the ones that don't have very sophisticated systems for their invoicing and payment collection. Same product works for them. It's cloud-based. It's easy to generate an invoice and send it off to someone else to pay in any way that they see fit. And you don't have to have sort of established financial credentials with that other party for them to make a payment. And they can pay you through ACH, credit card, debit card, check. And it makes it really easy for them to have a way to professionally get payments from folks.
Well, I can tell you that one of the things that we harp on quite a lot as a best practice to our shippers is shipper of choice. And increasingly, as the market goes more in the shipper's favor this year versus what it was in 2018 when we saw a massive capacity crunch and it was more in a carrier's favor, we're starting to see this carrier of choice. And I think really ultimately it's just a balance where everyone's starting to realize at the center is really good technology and the digitization of the world of logistics so that both of these players and often a middle company like a 3PL in between or technology provider can come together and collaborate better, can do more business together that is profitable and is focused on strategic initiatives and not on administrative work like payments or paperwork or contracts or even, capturing the communications. And we're seeing technology happen all around the world to help in any sort of ways. But it's really nice when you see something that's geared towards our industry, right? And I think when our listeners might hear about payment platforms, they might go, well, aren't there already payment platforms out there that these companies could use? What makes RoadSync different for this industry over, say, that makes it such a great mobile payments platform that is tailored to the industry, maybe over using something general like a Square?
Yeah, I mean, look, Square's a great user experience and is a great product and really brought payments to smaller mobile merchants. And so in a lot of ways, we're doing a similar thing. But it's different. I mean, the Square is made for consumer facing payments. So it's made for someone accepting payments at a coffee shop or at a festival or, in some sort of retail environment. It's not made for B2B transactions. Our customers are different. They take different types of payments. So you see things like fleet checks. They have a very specific way that the invoices have to be presented so that they can be reimbursed up the supply chain. And they have to have very specific pieces of information. And we allow customers to do all that within our platform. And in addition to that, we allow them to collect a lot of custom data that is sort of natural to the industry. I mean, our warehouses might track PO numbers or door numbers or appointment numbers. And it's really made for the way that these folks do business. And also it is made for the way that workflow happens in these facilities. One of the things that we uniquely do is somebody at one of our merchants has the option of sending an invoice up to a truck driver's broker or carrier to pay on his behalf if he doesn't have a payment mechanism, and they can do that real time. Square's just not meant for things like that because they don't really understand how transactions and business are conducted in the industry. And we do, and that's what we build our platform to support.
Yeah, I think when the platform, any platform you use, mirrors the real world process of what you're comfortable with, you're going to be able to get some trust into that, more active use, meaning more adoption, which gets more ROI for the company who, uses that platform. And you feel confident that that technology is truly matching what you want to see as far as the outcome. So that's fantastic. And it's good to know that, we have more technology players in this space, such as RoadSync, alongside companies like Ceresys, because we're all going to help each other get to that digitization, that digital transformation that so many other industries are more mature in. And in such an industry that if we can root out costs from it, then we help the consumer by able to lower prices or make it more convenient, and we still remain profitable. We match those expectations that are being created in the marketplace while not having to lose our operational shirts, if you will, because it costs so much to deliver on those expectations. So, Robin, thank you for imparting upon our listeners your great wisdom when it comes to all things payments, especially for the logistics industry. Where can they find out more information about RoadSync?
Yeah, check us out at roadsync.com. And we also are on Twitter at GoRoadSync. And we, love to hear from folks.
Absolutely. Well, we'll make sure that on the publish page here, where people are listening, that you have a link to that website and a link to that Twitter profile. Definitely join in on the conversations. We're trying to build out the Twitter community there in the supply chain, and it grows every day. So we'll be happy to add RoadSync to the roster and drum up some conversations as it pertains to mobile payments for logistics. So thanks again, Robin, for coming on to the Freight Project podcast. We really appreciate it.
Thanks for having me, Adam.
Absolutely. And for all of our listeners out there who tune in each week, we can't thank you enough for your support. Have a good one, and we'll see you on the next episode.